It's about that time of day again, folks. Welcome back. Welcome back. You know what time of day it is. 7:30 a.m. Eastern Time, Monday through Friday. We've got our normal crude oil morning prep this morning. My name is Joseph. I'm here in Los Angeles. I've got my screens up this morning, and of course, I'm here with Marty Errico from Traders Audio. He's all the way across the country on the NYMEX exchange, and he's going to provide us with some pit analysis this morning. So once again, my name is Joseph. Welcome aboard. I'm from schooloftrade.com. I run a live trade room each morning at 8 a.m. Eastern Time with members from all over the planet. I invite you guys to come over and join me sometime. I'm a technical analyst. Today I'm going to be working on a top-down approach. Top-down approach meaning we'll start with some weekly charts today as we wrap up a very, very profitable week. And we will, of course, drill all the way down to analyzing London, analyzing the overnight session, and, of course, we're going to try to anticipate some direction at the open. The key to anticipating the direction at the open is identifying those high percentage trading opportunities. Just because I pick up on some reversal points, just because I find the direction at the open doesn't mean I can make money with it, right? I got to make sure I can profit by looking for those high percentage opportunities. So we'll define those for you guys today. And of course, I'm looking for trading opportunities starting at 8 a.m. Eastern Time this morning. Once I'm done with you, I'm going to toss it on over to Marty Errico. Marty's from Traders Audio. Traders Audio, they have a broadcast in the NYMEX pit doing both crude oil and natural gas. Marty and his partner Jeffrey, boy, they do a great job every morning with their broadcast starting at 8:50 a.m. And of course, Marty is our pit analyst, and I think to be a very unique way of preparing for crude oil each morning. I'm going to look at the charts, and then Marty's going to tell us what he's seeing from the trading floor. In other words, we're looking at market direction, divergence, market internals. We'll look at some option prices. And very important, we'll review those pit session levels today. These are the levels that the pit traders are going to be watching, which are many times much different than what our screens tell us. So hold on tight, guys. Let's jump right into some charts this morning. Now, what day is today? Today's a Friday, right? So Friday mornings, Monday mornings, I like to get a look at the weeklies. Now, I want to remind everybody that on a Friday morning, we finish up the week. Time is not on our side. Friday mornings are always notorious for being early in, early out. Right? In my live trade room, we're not trading after 11 o'clock on Fridays. On a summertime Friday, it could be even earlier. Right? It could be as early as 10:30 this morning, 10:15 this morning. We have seen sometimes in the summertime when it will really slow down quickly. Okay, so don't forget about that. We also know that we've got rollover coming up here shortly, early next week, that should be. We did roll over on markets such as the dollar, such as the euro, such as Russell, all the currencies, of course, and the E-minis are rolling over here today. Crude oil, though, will not be rolling over until the 19th. So we have about 5 more days there. So that'll be, what, Wednesday next week? So keep in mind, rollover middle of the week next week. Yeah, it will be Wednesday because it usually rolls over for us on our screens. They're rolling over in the pit right now. But it usually rolls over for us on the screens on a Wednesday, on an inventory day, right? And as you can imagine, contract rollover day, when it coincides with inventory day, right? It's what nightmares are made out of if you're not prepared for it. All righty. So now we know here what the story is. Here's the weekly chart. Now, the weekly chart's not going to give me any specific price levels to trade today, but what it will do is it will give me a little bit of a clue as far as what we've seen going on the last few days. And what we've seen, you can see here, is for the first time in the last 1, 2, 3, 4 weeks, we have 2 bullish weekly candles. And you can see here that we are threatening to close above the weekly candle 1, 2, 3, 4 weeks ago. So 4 weeks ago, you can see this high candle, 97.34. That's going to be the number these buyers are going to be gunning for today. If we get a close this week above 97.34, okay, remember that doesn't mean price can go higher just above it. No, it needs to mean we need to end the day today above 97.34. When the closing bell hits at 2:30 p.m. Eastern Time on the floor with Marty, 97.34, if we get that, if we're closing above that, we know we've got tremendous bullish pressure now, and we are most likely going to test that 100 big round number. All right, 97.34. That's what the weekly chart's telling me. Now, this price wedge on the weekly chart technically has not been broken yet. We've got to see some levels above that 99.44. So until we get above this 99.44, which coincides with the swing high, right? That major sell zone above us, 96.44. That's when we'll consider this price wedge to be broken. So we are pushing higher this morning. Clearly we have a bullish candlestick on the week. Clearly we have that big green body to it. And we already mentioned that 97.34. So keep that number in mind, 97.34. It's not going to make much of a difference for us today, but if we close this morning here, if we close this afternoon above 97.34, be on the lookout for it. All right, now the weekly chart. Again, weekly charts tell them the story. Now what we do is let's drill down to a little bit faster time frame here. And the faster time frame I'm going to go to next, I'm going to grab a 60-minute chart. The 60-minute chart of crude oil is really, really important this morning because it outlines a few specific clues. First of all, we can see the bullish channel. The bullish channel shouldn't be any surprise if you've watched these broadcasts over the past few days, over the past few weeks. We know this bullish channel is something we've had quite a bit of. And this bullish channel has been very, very good to us over the past 2 weeks because, as you've heard me say many times, our high percentage trades are going to be buying here on crude oil. So right now we see the bullish channel. The bullish price channel makes it very, very difficult to be a buyer at the highs of that channel. The second clue we saw this morning is the ABCD. Do you see it? It's a little bit tough to see. A lot of stuff in this chart, A, B, C, and D. This is one of my favorite patterns. It's called the symmetry pattern, right? Symmetry in price, symmetry in time. We always look for symmetry on any market we're trading. Crude oil is no different. So this symmetry tells us that we have what appears to be a wall of resistance up here now at the D. So that tells me now to look for price to fall off those highs, hopefully into this 96.16 area, maybe into this 95.51 area, where we will look for the high percentage buys either later on this morning or possibly tomorrow, possibly Monday morning. Okay, be aware, we are buried into this sell zone, right? Big sell zone overhead. This thing has been here for quite a while. And you can see the big wicks on top of these hourly candles, right? Big wicks up top here, almost telling us that the buyers are trying, but unfortunately there's a little bit too much supply entering the market. Now we have some major news coming out this morning at 8:30. We've got consumer sentiment just before 10 o'clock this morning. So we have quite a bit of information that may really give these buyers all the boost they need. So don't be surprised if this thing continues to take off to the upside. Yesterday was a very good example of a market that was on a tear to the upside. I tried to sell those highs a number of times and it just wouldn't go. It kept poking its head back higher. So we know this bullish channel tells us prices are most likely going to continue to rise. We also know that this bullish channel, along with the symmetry, tells us we are overbought right now and we should consider waiting patiently to buy deep pullbacks. Now, Joe, can I buy? Can I just hit the buy button right now? You definitely can. But if you hit the buy button right now, you're going to have a very wide stop loss because in all reality, this price action can come all the way back down before it's even considered to be oversold. Okay, it's way overbought right now, which means I can buy, but as traders, we live and we die by our stops. As long as you're okay with that monster stop, that'll be over $1 stop loss. Okay, you can get long now. What I would recommend we do is find some areas below me, 96.52, 96.16, 95.51, probably not going to get down there today. Boy, I would hope so. It'd be a great buying opportunity at 95.51 today. But again, we'll wait and see. We know that 96.52 and 96.16 are the most likely areas of buying opportunities early this morning, mid-morning, and early afternoon. But again, beware, it's a Friday morning, so we're not going to be here very long today. Now that we know the direction, now that we know the plan, now that we know the high percentage trades are bullish, I will get some short-term selling opportunities, but we can easily see here the personality is bullish. Now let's find those levels we're going to use to participate. Anybody can call direction, JJ. I listen to that guy on CNBC every morning. He calls direction every morning. What's the difference? Well, the difference is the guy on CNBC doesn't need to enter into trades to pay his mortgage, right? He gets paid by his broadcasting company. As lonely old traders, we have to figure out how we're going to capitalize on this. So now we know direction. Now I take out a 5-minute chart. I start to look for the specific price levels that I'm going to be using for those long trades. Now we start putting the pieces together. Levels that I have below me. Remember, we have levels above us. We have levels below us. Let's talk about the levels below us here first. Most important, we see the previous high of day. Price action will gravitate towards the previous high of day. And please remember, previous high of days, previous low of days, these are red hot levels for me. I'm a very, very big fan of previous highs and previous lows. What I'm seeing right now, though, is that we have tested it once, twice. If this comes down and ends up chopping on top of this previous high of day, we get a big problem for market personality. If you remember with me every morning in the trade room, we always talk about this. The first 2 times we hit that previous high or previous low, that's like an electric fence, right? It's going to jump. It's going to move. But after 3rd, 4th, 5th time, all of a sudden now we start to wonder, what's going on? Why aren't these buyers either in charge going higher, or why haven't these sellers grabbed this thing and pulled this lower? The previous high of day is a clear psychological line in the sand. Everybody remembers where we closed yesterday. Everybody remembers the previous high from yesterday. That's why it's such an important level. It's so fresh in everyone's minds. But again, remember, if this thing sits on top of that previous high of day, we got red flags firing everywhere on this summertime Friday. I love the idea of buying the 96.87, love the idea of buying the 96.62, and of course, as we go lower, we have a reversal zone here starting at 96.43 down to 96.19. I love the idea. Again, you see here this 95.90. Remember we talked about 96-ish on that. It was 96.52 on the 60-minute, right? That's right about here. We've got 96.16. That's the big level. 96.16 off the 60-minute chart is right here. And of course, 95.89. Wow, that's a perfect. Yeah, that's exact. This is the same level as that 60-minute buy zone. So boy, if we can get down to that 95.89, we look hot here today for a buy. All right. You can also see I've also included a multi-day bullish channel. There is a multi-day bull channel on this chart as well. A little bit tough to see it. I've marked it up here. It basically travels like this. This is over 2.5 days. And so we know here we're going to look to buy the lows of that channel as well. So I would love to get long here down around this 96 area, 95.80, 95, right, 95.90. All right. As we go lower, I've got 95.56. I don't think we're going to get down here this morning, but hey, this is crude oil we're talking about. And then, boy, would I love to buy this previous low of day. We have both a reversal level at 95.02, previous low of day at 95.02. It literally matches up perfectly. So we have a reversal level and the previous low of day. So, Joe, you look at the previous low of day and the previous high of day? Absolutely. I'm going to buy pullbacks at the previous high of day, using it as support below me, using it as resistance above me. If we fail above that previous high of day, that's a selling signal. If we get all the way down to the previous low of day, I will look for price to fail below it, and then whoop, that's called my inside-out setup, one of my favorite setups. I will look for a price reversal at any of these locations, 95.02, 95.56, 95.89, 96.19, and 96.43. And again, we have some medium-term buy opportunities here on the way down. All right, looking good. Price levels to the upside here this morning. Now, this is where we had some trouble yesterday. Remember what happened yesterday? Yesterday morning, we got exactly what we planned for, but we didn't get the big drop. Remember what happened yesterday? We went into the reversal zone, dropped, but instead of getting that big tumble, which we usually get, right? You know what I'm talking about, traders. We got this little teeny tiny whoop, and then once it went up, everybody in our trade room pretty much knew the dollar was falling, well, until after the news, of course. But we had crude oil. Once that dollar started popping up, boy, everything started jumping, and crude oil never looked back yesterday, right? If you recall, we never got that big reversal off those highs. Those days are going to happen. Today may be a day similar to that. So after we take that reversal number one, after we take that reversal number two, if we haven't seen that big reversal yet, and if you're starting to see those big wicks at the bottom of your candles, if you're starting to see, in other words, the sellers getting smacked around every time they try to pull that price back down, which is normally what happens on crude oil, guys, if we start to see that again today, just rewind the tape and go back till yesterday. Yesterday we saw a very similar personality to it, right, where it felt like this price was on a string. And this is where traders need to use that little bit of intelligence, that little bit of intuition. We know what it feels like when price collapses. We know that feeling when the speed drops and all of a sudden it just whoop, right, almost like the buyers never existed. If we don't get that today, we know these buyers are still stuck on pushing higher. And that way we're going to start buying pullbacks. All right? Again, be careful buying pullbacks. Buy the deep pullbacks. Be careful buying those shallow pullbacks because we're going into overbought territory here, which is always going to be a challenge for a new trader. Resistance levels overhead that I will be looking for price reversals. Remember, these are short-term price reversals, long-term buying opportunities. What I'll do is I'll wait for price to bounce off the reversal. I'll get short. I'll look for a Fibonacci-based profit target, take my profit, and then look to keep it going long. All right? That's the plan today. Levels of resistance, 97.30, 97.54. We've got this entire channel high. This will act as resistance, although it may not feel like it at times. 97.84, 98.17, and 98.71. I'll make sure to put all these levels up on the blog here once I grab the mic over to Marty. Guys, as always, it's a pleasure to help you guys out this week. I hope everyone's enjoyed the broadcast this week so far. Don't forget to send me some feedback. I'd love to hear your feedback on everything I'm talking about today, right? And let's hear what Marty has to say about what I'm talking about here this morning. I've been flapping my gums about the charts I'm seeing. Marty, am I off my rocker here today? What are you seeing here, my man? Are you seeing the bullish power too I'm seeing?
Yeah, big time bullish power to the upside. And it's been high conviction as well. Once we were talking about that level of super resistance yesterday that we spoke of, that 96.40, 96.39 level, once we broke above that, it was really no looking back. And we were able to see some really nice upside pull. So we have these levels that are very similar that you have, that I have, that we're looking at ahead that could be a potential reversal zone that we need to close and settle above, just not for one day, for several days to really, if you're looking for $100, so we really need to get to see $100. So we need to close and settle above 97.25, above 97.40, above 97.50 for at least 3 or 4 days, you know, and then we can possibly see $100. So what do they do in the options? They really do show us a lot of interest in that $100 level, both in July and in the Augie strikes. But we'll get to that in a minute. Yesterday, volatility gets pounded, right? Gets really, really pounded. Now, on the chart, I put up 19% on the implied vol, but that was from yesterday's numbers. These are all kind of yesterday's numbers, but I want to show the difference between. That's why I do that. So it's 19% on the bar yesterday that we had, but right this morning I see 17% in implied volatility. The OVX obviously closed and settled at 2170. Still, volatility just coming in and taking it on the chin. Now, why? Yes, there's lower volatility in the higher strike levels above, so that's why we're depending on volatility to fall. We have no gamma as well in this market because we didn't get break even yesterday, but as of right now, this morning, no gamma. Gamma is still pretty heavily bid. Because it's based on the pit session opening bell price. So if we could get an open above 97.25, I mean, this will still be somewhat of a bullish-like day. Anything below 97.25 for the pit session, at least, we can see somewhat of a grind, chopping around type of deal. But roll in the pit is almost done here. We've been watching this roll kind of occur in the pit, and we've been really patient on just seeing what's going to happen now in the Augie. The Augie spreads have been absolutely in contango in such a big way, but we'll get to that in a minute. So as I mentioned, the first thing we do is we look at our dollar index. We saw our dollar was down by about 80 points on the DXY, about 40 points on the dollar index. So that risk-on sentiment coming back into the market that we've been seeing, and it's been working. So we're going to keep on focusing on it. Let's also talk about the products. All 3 products traded higher in the pit yesterday as well. We turned to RBOB, crude, heating oil, all of our products trading higher, along even with the Brent crude. We saw our Brent also trade about 105 today, so that was pretty big here into the Brent crude. Again, huge volume to the upside on Brent. I got just about almost 105.50 right now, so big upside activity, up 52 bucks, 52 cents, sorry, today as we hit that 102.50. The spreads, Brent WTI spread. We're looking at July to July, Augie to Augie. Since we're in August contract for Brent, I'll look at the July to Augie. 680, down almost 70 cents today, just this morning. So you can see the big spread kind of tightening up in contango along with volatility as well. All right, let's rock and roll over to what's happening here in your options market. So we talked about a couple big strikes yesterday, and these are them. We have the 98, right, call. We saw 97 call. We saw the 95 call, all being purchased quite significantly over 5,000 each strike. The biggest one, though, was the Augie and July 100 call, 10,000 in the Augie, about 3,000 in the July. So you can see they're targeting that $100 level, but this is very interesting now. Now, I mentioned all those strike levels traded about 5,000 times, 5,000 to 10,000 times. On the downside, the 95 put, they bought them 15,000 times. The 94 put, they bought them 7,000 times. The Augie 90 put, they bought them 7,000 times. So you can see they share up the downside for sure. They're just not all upside activity. They share up the downside just to massage some risk around, of course, is always the case. That's what they do the best. And that's something that we really want to focus on as well, just to make sure that, hey, this isn't all this very, very bullish activity. They're looking to buy dips, and that's been the plan for God knows how long. You know, that's what these traders do down there. Any little dip they have, they buy it. So paper's still relatively long today, into today at least. Locals are pretty much flat-sided. The little guys are flat-sided. The larger locals, they're still very long. They're still very bid, if you will, even in the outright contract and in the options. Again, they're loving that $100 fence. They basically sell the puts, they buy the calls, and they sell volatility. Locals have been short volatility for God knows how long, probably the last 2 weeks or so in the pits. So very interesting kind of take on just exactly where do we go from here. All right, let's now also just talk real quickly about the resistance above. So, I mean, this 97.25 is very, very, very important. 97.25 all the way up to 97.50. So we have that resistance zones that JJ was talking about. I have a very similar one on my chart when I was recapping yesterday. I don't know if anybody saw that. But when we were recapping yesterday, I had this chart up that was showing that resistance zone from JJ, from, you know, my own charts. But again, it looks very similar to JJ's in the sense of 97.25 to 97.40 is the reversal zone, and that's where we could possibly turn around because we haven't seen these levels since about beginning of May. So little times away, and it's coming into a double top there in May. We ran into it 2 times, and then we faded it. Now we're back up at it here in the middle of June. So you can see kind of about a month and a half. So like I mentioned, if we do want to see $100, we need to close and settle above that 97.25 for a couple days and just establish a little bit of a value area around that level. But as of right now, on my charts I'm looking at, and on the charts that are being passed around the trading floor, we are at the high of a channel. We are at the high. We are at some really big resistance. So it all comes down to, could we break this 97.30, the overnight high? Could we break the 97.25, 97.40? If we do, get ready to buy up to 98. Get ready to buy up to 98. That's all I can tell you. Get ready to buy. If we can break above these 97.25, 97.40 levels, we can at least get up to 98 even. So if not, then we'll fade it, and we'll start to just watch a little bit of a fade, and then let's see exactly how these paper players end up getting out of their positions, or these large locals. Let's just talk about levels real quickly for your crude, and then I'll talk about natural gas for a little bit with you guys because, well, for crude, we also just want to one thing. For crude, a lot of the traders in the pit are focusing on the Cushing, Oklahoma numbers. Cushing, they showed a draw, obviously, in the inventory numbers, and it's showing you that crude demand is kind of there just a bit, not commercially with the big inventory numbers, but the Cushing numbers are more of a localized number here around the United States. And it's just showing us the flow of oil through the Seaway pipeline and how it's basically working and the potential that it can do for us in terms of oil supply. Now, the Cushing, Oklahoma numbers are very important. That's why we did end up rallying yesterday and seeing this added with some technicals. Again, once we broke above the 96, level, 96.39. That was a very technical level that a lot of the traders were looking at. And once we popped above that, boom, we were able to really see that buying come in. So it was kind of technically and fundamentally, if you look on it on the way that I do and the guys in the pit do. We have Iran's elections coming up this week, and we're going to have to watch the geopolitical risk premium as well in this market the next couple of days. So please do so accordingly, because they have been having tensions in Turkey and the Mideast, and like I mentioned, they are having their elections in Iran. So that's going to be quite interesting to keep an eye on too. All right, volatility is what we want to watch. All right, let's get over to those levels now, ladies and gentlemen, as we always do every single day. We're starting them off by looking at your crude pit session from yesterday. That 96.92 was our high, and hey, we are trading above it right now. 95.44 was your low. Great buying opportunity, as JJ said. And we closed and settled the day quite near highs at 96.65 yesterday, which we were trading above. Yesterday's pit session, net change of $1.06 and a range of about $1.50. Today, your pit session daily pivot, 96.34. We're already trading higher above it. Resistance above, I got 97.24, 97.82, and 99.30. So these are your levels right here. Again, 97.24, 97.82, 98 even, and 99.30. Once again, 97.30, sorry, 99.30. So again, we're going to be watching these levels in a big way, and these are great profit targets. First, got to get above that. First one, R1, 97.24. Once we get above that, we're pretty smooth sailing up to 97.82, and then 98 even, 99.33. Downside here, good levels to be buying the dip, so to speak, as I was just mentioning. If you don't know what that means, we're buying on the way down as the market dips lower. 95.76, first support level. 94.86, also your first support level. And 93.38, ultimate level here to the downside. So we were speaking about these large options in the pit already, so I won't get into that. Now, natural gas, we did expect somewhat of a, if you remember yesterday, what exactly did I say? Let's rewind the tape. We're expecting somewhat of a draw, right? Somewhat of a less than an expected build, not so much a draw. But we were expecting something to move the market a little bit higher, and that's exactly what we got. We were looking for 97. We got 96 in the natural gas. You can see not a huge rally because we only, in natural gas, we only got, just that little tiny, less than an expected build by 1 BCF, so it didn't rip the market higher. Now, we do have just a little bit of resistance here above on your natural gas that we're going to be watching out for, up at 93.85 and 93.87. So that's three, sorry, I didn't mean to say 93, I'm sorry, 3.95 and 3.87. So 395, 387, big levels here up upside. I'm looking to sell that 387 as soon as we get up to it, and then we'll get back into that trading range, and we can make it back down to that 370 because they're loving this market that they can just sell every little pop up. So we got a nice little pop up. It was long due as well. We're going to be coming into that resistance up into 387 even, and that's going to be it. If not 395 even, as I was mentioning, it could be some nice level of resistance above. That can get us back down to 370. Natural gas pit session yesterday, 385 even, your high, your low, 371 half. Close and settle at 381.30. Net change was about 9 pennies to the upside, and we had about a 13.5 cent trading range. So that's really big. That's 135 ticks, so that's really big, 13.5 cents. Daily pivot today, 379.30. Once again, 379.30, which we are trading above at the moment here, above that daily pivot today. With that volatility coming in and really getting annihilated the last couple of days, from yesterday in the last few hours now, 27% in implied volatility, as you can see. Vol index trades at 28 even. Resistance above, I have 387.10. Once again, that's 387.10, your first level of resistance above. R2 is going to be 392.80, and R3, 401.30. Support down below, I got 373.60, 365.80, and 352.30. As you can see, those are your levels of support down below. Alrighty, guys, let's also just really quickly talk about open interest this morning just to see if shorts are squeezed out or not. So right now on your crude, majority of the open interest now, as you can see on the chart, I have 172,589, and we just seen a little bit of a decrease in open interest, 172,000 as I mentioned. So we're still there. But look at the Augie contract. That's something you want to keep in mind. The Augie contract, open interest, 231,512. So that's really, really, really big there. And let's just talk about natural gas open interest this morning here. It's just sitting at about 248,545. So we're watching shorts kind of getting squeezed out just a bit here. We're watching open interest starting to kind of just fall just a bit in the front months, and then we're starting to see it rise in the back months, which is also bullish. So that's really it for me. I'm going to throw it back over to JJ this morning here on a Friday. Hope to see you guys back here on Monday, and I will see you guys very shortly. Have a wonderful day, ladies and gentlemen. I'm going to throw it back over to Joseph James.
Thank you so much, Marty. Appreciate it as always. As always, great to see some confirming factors, some conflicting information. Always a very useful tool, guys. Remember, this is very unique. I'm nowhere near the exchange here in Los Angeles. I have no idea what the exchange is telling me every day, and being able to hear this from Marty directly from the NYMEX exchange, in my opinion, is priceless. So, Marty, thanks so much for coming out and joining us here today, and thank you to everybody who came in and listened to us this week. It's been another one of those profitable weeks. Boy, we had a great week in the trade room this morning. I know Marty and Jeffrey did a great job this week here on their broadcast at Traders Audio. Don't forget to log in to their broadcast at 8:50 a.m. Monday through Friday. And, of course, with me, I'm at 8 a.m. Monday through Friday. So I'll be starting up right about now. We'll see you guys here on Monday morning, Monday, 7:30 a.m. Eastern Time. So we get a couple days of a break. Enjoy that summertime weekend. Don't forget this morning we've got some early morning news kicking off the day. But remember, it's a summertime Friday, which means traders are going to be hitting the exits a little bit earlier than normal today. So keep an eye on that clock. Don't forget to wear that SPF, the helmet, seatbelts fastened over the weekend, and we'll see you guys back here Monday morning. Have a wonderful summertime weekend. Thank you, Marvin, for the support. As always, we'll catch you guys here next time. Remember, you got to learn it so you can earn it. Adios, amigos. Bye-bye for now.